Welcome back to our blockchain series. In part 1, we introduced the basics of blockchain and cryptocurrency. Today we're diving into how blockchain technology is revolutionizing industries through smart contracts, decentralized applications, and decentralized finance. Smart contracts are one of the most groundbreaking aspects of blockchain technology. Think of them as digital contracts stored on a blockchain, which are automatically executed when certain conditions are met. This allows for transactions and agreements to happen instantly without intermediaries like banks or notaries. Smart contracts work by using simple if, when, then statements coded into the blockchain. If you're familiar with programming, you might have come across conditional statements before. When a condition is met, a network of computers verifies and executes the action, whether it's releasing funds, registering ownership, or sending a notification. The blockchain then records this, making it permanent and viewable only by those with permission. For instance, let's say you're buying a car through a smart contract. Once you make the payment, the smart contract immediately transfers the car title to you, without a middleman and with total transparency. Smart contracts bring several key benefits: speed, transparency, security, and savings. With smart contracts, there's no need for a middleman. Transactions happen directly between parties, and records are shared across participants. This transparency and trust are crucial, especially in finance, where altering records for personal gain has been a long-standing issue. Security is another major advantage. Smart contract transactions are encrypted, and each entry on the blockchain connects to the next, creating a chain that's nearly impossible to tamper with. This makes it a powerful tool for secure, reliable transactions. Because smart contracts remove the need for intermediaries, they save users both time and money, whether it's in finance, real estate, insurance, supply chain, and smart contracts streamline these processes and reduce fees associated with third-party involvement. Smart contracts are already being used in various sectors. For instance, in insurance, they automatically process claims if predefined conditions are met. In real estate, smart contracts can automate property transfers upon payment. These examples showcase the flexibility and power of smart contracts in diverse industries. If you're interested in smart contract development or writing smart contracts yourself, there's a few key points. Each programming language used for smart contracts is tailored to the needs of specific blockchains and use cases. Solidity, for instance, has become the most popular due to its deep integration with Ethereum, enabling complex decentralized applications. Meanwhile, Rust and Move are gaining traction for high-speed, scalable platforms like Solana, where performance and security are critical. As more blockchains emerge, languages like Cadence for Flow and Scripto for Radix are also helping developers address unique challenges in DeFi gaming and asset management on those networks. Smart contracts are paving the way for a more secure, transparent, and efficient future in digital transactions. Whether it's financial transactions, legal agreements, or even real estate, they're making the blockchain far more than just a platform for cryptocurrencies. They represent a fundamental shift in how we think about trust, transparency, and efficiency in the digital age. DeFi, or Decentralized Finance, is a revolutionary approach to finance that operates on blockchain technology. Its goal is to recreate traditional finance services like lending, borrowing, trading, and saving, without relying on central intermediaries such as banks or brokers. This is achieved through smart contracts and decentralized applications known as DApps, which enable people to interact directly with complete control over their funds. Here's how it works. DeFi platforms use smart contracts on public blockchains like Ethereum, meaning anyone with an internet connection can participate without needing a bank account or approval from a central authority. Imagine lending your crypto assets to earn interest or taking out a loan without credit checks, all automatically handled by code on the blockchain. Some key benefits of DeFi include greater control and transparency, where users can manage their assets directly and can view transaction histories on the blockchain. accessibility and inclusivity, so anyone, anywhere can participate as long as they have internet access. Again, DeFi also comes with risks. Since the code is publicly available, hackers can sometimes find vulnerabilities, and smart contract bugs could lead to losses. Additionally, there's a lack of regulation in the DeFi space, which means that if something goes wrong, there's usually no insurance or authority to intervene. For example, suppose you want to earn interest on your crypto. Instead of depositing it in a traditional bank, you could use a DeFi lending platform like Aave or Compound, where your funds are pooled with others and borrowers can access them through smart contracts. The interest you earn is automatically credited to your account. DApps, or decentralized applications, are a type of software application that runs on a blockchain network rather than on a single centralized server. Unlike traditional apps that are controlled by a single entity, DApps are decentralized, which means they operate on a network of computers or nodes and are often governed by a community of users. This structure provides more transparency, security, and resistance to censorship. So how do DApps work? DApps use smart contracts, self-executing contracts, to perform functions automatically. When specific conditions are met, these contracts execute actions without needing a middleman, like a bank or a tech company, to oversee the process. For example, in a decentralized lending app, a smart contract could automatically transfer collateral to a lender if a borrower defaults on a loan. So some examples of popular DApps. Uniswap, one of the most popular, is a decentralized exchange known as a DEX that allows users to trade cryptocurrencies without a central authority. OpenSea, a marketplace for buying, selling, and trading NFTs, all powered by blockchain technology. So some of the benefits of DApps: transparency and trust. Transactions are stored on a blockchain, which anyone can verify, ensuring data integrity. Censorship, again, since DApps are decentralized, no single entity controls them, making them difficult to censor or shut down. Enhanced security. DApps rely on blockchain encryption, making them more secure and resistant to hacking than centralized apps. While DApps bring a lot of benefits, they can also have challenges like scalability issues and higher transaction fees, especially during times of network congestion. They also require users to have some understanding of blockchain to navigate effectively. Thanks for joining us in part 2 of our blockchain series. We hope you now have a better understanding of how smart contracts, DApps, and DeFi are transforming the blockchain space. Don't forget to check out part 1 if you haven't already, and stay tuned for more in-depth content on blockchain technology.